let's look at the data. Right now, in today's market, we're seeing this massive divergence. You've got the story we're all being told about the economy, and then you have the reality that the numbers are actually showing us. And here's the thing, they are not the same. This gap, it's creating enormous risks, but also some huge opportunities. So let's break it all down and see where the real story is.
And this quote from Mish Talk, well, it just cuts right to the chase, doesn't it? We keep hearing that inflation is cooling off and wages are finally going up, but for millions of people, that just doesn't feel right. It doesn't match what they're seeing in their own bank accounts. And the reason for that is that the official story is often built on some pretty flawed data. Data that completely ignores the real pressures people are facing every single day.
Okay, check this out. This table exposes a huge blind spot in our main inflation gauge, the Consumer Price Index, or CPI. The CPI is supposed to track your cost of living, right? But it pretty much ignores the three biggest costs of owning a home after your mortgage: maintenance, property taxes, and insurance. The government calls them capital expenses, not consumption. But let's be real. For the average homeowner, that's over 15 grand a year in costs that are basically invisible to the official inflation number. This isn't just some little accounting quirk. It's a fundamental distortion of economic reality, and it affects everything from Federal Reserve policy right down to your portfolio.
So, this flawed inflation data, that's just one piece of the puzzle. Now let's dive into our first case study and see how this disconnect between the narrative and the hard data is playing out in the broader economy. We're seeing some really conflicting signals that you absolutely need to pay attention to. This is the critical question right now, especially when we look at the manufacturing sector. The story is that production is strong, things are humming along. Okay, fine. But if that's true, where are all the customers? Who's buying all this stuff? The data suggests a very, very different story is unfolding behind the scenes. And this ISM data just lays the anomaly out perfectly. You see that first bar? That's factory production, the headline number everyone's looking at. And yeah, it's holding up. But then you look under the hood. New orders, which is your measure of future demand, are low. And because of that, unsold inventories are high, and they are rising fast. The key takeaway is simple. Companies are making stuff that isn't being sold. That is a classic divergence that signals big trouble ahead. This quote from S&P Global really puts it in stark perspective. An unplanned buildup of inventory like this is a massive red flag. And why is that comparison to 2007 so important? Well, because that was right before a major economic downturn. This inventory overhang is like a coiled spring. Eventually, companies have to slam the brakes on production to clear out their warehouses. And when production gets cut, layoffs usually aren't far behind.
Now, this disconnect isn't just happening at the macro, big picture level. Let's shift gears from the broad economy to a micro example, where the narrative has become completely detached from reality. Yeah, we're talking about meme stocks, where hype is the only thing that seems to matter.
Just look at this number, 1,240 times. According to FactSet, that is the valuation multiple for Donald Trump's media company, DJT. It's trading at 1,240 times its annual revenue. To call that speculative is, well, it's the understatement of the year. This is a valuation that exists purely in the world of narrative, not numbers.
And this slide just lays out the divergence perfectly. On the left, you've got the company's grand narrative, a massive media and tech powerhouse. On the right, you have the actual data from their own financial filings. Revenue is declining, losses are getting bigger, and costs are soaring. There's absolutely zero connection between the story being sold to investors and how the business is actually doing. It's the classic example of a stock driven by story, not fundamentals.
So, what's the point? The fact that assets like this can even exist tells us something really important about the market environment we're in. When stocks can trade at these kinds of crazy valuations, even with fundamentals getting worse, it's a huge sign of speculative froth. The market is rewarding hype over actual performance, and historically, that's a really dangerous setup.
And all this speculative energy isn't just in meme stocks. Let's turn to the biggest narrative of them all right now, artificial intelligence. Everyone's trying to figure out if we're in a bubble or a generational boom. But the data suggests a better way to think about it might be as an all-out war.
This is the billion-dollar, maybe trillion-dollar question that's defining the market. On one hand, you have the bulls saying this is a transformational tech that's going to reshape everything for decades. On the other, you have the bears who see a speculative bubble fueled by nothing but hype, just waiting to pop.
But if you look at it from an institutional perspective, it's not a simple bull versus bear story. It's a strategic battle. You've got Nvidia with its dominant moat in GPUs. Those are the chips that are the workhorses of AI.
Right now, everybody needs their hardware. But then look at Google. They're using their own custom TPU chips, designed specifically for AI, not just for themselves, but they're selling them to rivals and startups. This creates a real competitor that threatens Nvidia's insane profit margins.
And this quote from Ben Thompson's Stratech just captures the dynamic perfectly. The AI race is becoming a capital-intensive war of attrition. It's a battle fought with billions and billions of dollars in research and infrastructure. Only the absolute giants like Google have the resources, the deep pockets to compete at this level. And that means the rewards will probably go to a very, very small number of winners.
So when you put all these pieces together, the broken inflation data, the manufacturing disconnect, the meme stock craziness, the AI arms race, these are not isolated incidents. They are all symptoms of a financial system going through a really chaotic, high-speed transformation, one that's accelerating at the breakneck pace of technological change.
So, after all that, where does this divergence leave us? Well, the data is pointing to two powerful opposing forces that are clashing right now, creating a very clear bull case and a very clear bear case for what comes next.
All right, here are the two powerful forces. The bull case is that we are just at the beginning of a transformational AI boom that's going to create trillions in new wealth and drive markets higher for years. The bear case? It argues that all of this is just a sideshow to the real story, a global financial system that is drowning in hundreds of trillions of dollars of unpayable debt. And in this view, a painful reckoning isn't a possibility, it's an inevitability. These are the two narratives at war. And of course, a quick reminder, this is all for educational purposes. The market data we've been talking about can and does change in an instant. This is not financial advice, so please make sure you do your own due diligence.
So what's the bottom line here? In an environment where the stories and the data are pulling in completely different directions, your best defense is a relentless focus on the numbers, period, and a disciplined approach to managing your risk. You have to filter out the noise and just follow the data. Which leaves us with the ultimate question. As these powerful forces keep colliding, which one is going to win out? Are we about to see a historic technological breakthrough that pulls us all forward? Or will the sheer weight of the system lead to a breakdown? That's the divergence we're all navigating. Stay disciplined, stay liquid.
We're tracking these flows in real time. While you analyze the next move, check out the tools in the description. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or look into Nvidia on Moomoo. Links are down below. Like and subscribe for more deep dive analysis.